For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello everyone, my name is John Locke. I'd like to welcome you to The Winning Trade, but first the required disclaimer material. Presentation given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware your risk in trading options is substantial. Please make sure you are aware of all your risk prior to placing any trades. Also note in this presentation, we may refer to hypothetical computer simulated trades into results. They really be as accurately represented as possible. Keep in mind live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with the Locke in Your Success LLC, where myself and our team of mentors are here to help you win in the markets and in life as well. And today I'm here to take you into the realm of something called professional style income trading. This is where we increase our returns and consistency through trading income trades with the flow of the market and utilizing trader subjectivity with high probability trading structures. It's a way that we can trade with flexibility and adaptability so that we can adapt ourselves and our trading to the market. It allows us to make more money with less work and fewer adjustments. It's just a really fantastic way to trade. So let's talk about the trade setup and the trade that we'll be demonstrating today. Before we do, please be sure to like and share our videos, and please make sure to subscribe. Your support helps us to continue to bring this wonderful content to you. Now, because of the great positive response that I got from the last subjective trade we did, I decided to do another one. So your opinions do count here. And this one here is an example of a trade that we did in our Pro membership. It utilizes the concepts that we teach in stage 4 and stage 5 of our Trader Success Blueprint, and it also utilizes the concepts we teach in our new program, Trading to Win. Now, the trade structure we're using is a simple bullish vertical. The initial risk on our position is going to be $2,092. Our anticipated return is going to be about 100%. Our potential return is probably over 200%. And our exit loss trigger, well, we really don't have one because our structural risk is so low and our potential profit is so high. But I will exit these early based on a technical breakdown. So if the market does something or moves in a way that I consider to be a technical breakdown, we will exit, assuming that there's risk remaining in the position. If it happens in the trade, and you'll kind of see what I mean as we go along, and there's no risk remaining in the position, we might as well stay in. Under most cases, the technical breakdown, if it's going to occur, should occur relatively quickly, and if it does, I should be able to get out and probably preserve some of that capital and maybe get out at around $1,000 drawdown. Okay, so let's just talk about why I took this trade, and then we'll show you the trade itself. So right here is the chart of the SPX on June 5th, 2024, when I decided to take the trade. So this is what we have here. We have an uptrending market. We had a market that jumped off or bounced off the support area. We have a cup pattern here that came into play, which I'm going to call right here. And I'm going to call here because this is where the breakout was, and this is where the low close was. We had a penetration of our support level, but it closed positive, and now we're turning back up, and we just had a breakout of our next level, which is, we will call right here. Now, with this evidence, the probabilities are very high that the market's going to continue up. And we can set in our price pattern targets through here as to how far it's going to go, which I'm not going to get into on this video. But when we set in our price pattern targets, we may want to go bearish off of our price pattern targets. Regardless, not only is this a good opportunity for a bullish trade, but it also gives us a nice control point. So in other words, we talked about a technical breakdown. This thing comes down and backs down into here. Then we have a failed breakout at the top here, and you might want to remove your bullish trade at that point, preserve your capital, depending, of course, on how much is left in the trade. We have very low risk. So if I go in here and we take a look at our analytical software, this is what I decided to do. I decided to put on a bullish vertical. It's a 53.90, 54.60. That gives us a total risk in our position of a little less than $2,100. It gives us a potential reward of almost $5,000. If we get a technical breakdown, which is going to be right around here, I should be able to get out of this at around 1,000. But I'm aware that things could happen. We could sit here for a while, then we could kind of drop out. So I may take the total loss on the position. That may end up happening, but the probabilities are I should be able to get out of this for around $1,000 drawdown if things go bad. And if things go really well, I'm looking at $5,000. So when you take a look at that, that's about 5 times what my expected risk is. And that's pretty darn good. I don't have to have really high win rate in order to do extremely well if I'm trading in this manner. So let's take a look at how the trade went. And this is another important thing too, is what date of expiration do I go in? What strikes do I choose? My choosing of my strikes are going to depend predominantly on what my price pattern target is. So for example, if I have this breakout here and I do this, and I do this, this is probably going to come up to around 5,500. And sometimes we stall at half distance. So in other words, I have a 5,500 price pattern target, and a lot of times I know I'm going to stall halfway there. So at 50, we'll call it 53, halfway to 55 is 54. So I'm pretty confident I'm going to get a move up into the 5,400s. So if I'm going to get a move up into the 5,400s, then, this trade should win. And if I get to my 5,500, then I'm going to win. I'm going to win a lot if I hit my actual price pattern target number here. And at that point, I might want to consider going bearish, because if I make a run right up to my price pattern target, a lot of times I bounce back off of it, right? So, or at least exit or taking some sort of action at that point. So that's kind of how the technicals are playing out. Let's see where this goes. I had a bit of a stall here on Thursday, stall on Friday. Right, Monday, we're just kind of at the same level. Now, this isn't a big deal. The market's kind of stalling. That's why I gave myself 13 days. I didn't do a day trade. I want to allow this to work out. So long as we don't break down, I'm giving it time. And then from here, if we go Tuesday, again, we're getting some moves here, but not enough. Give it Wednesday. And one of the advantages of doing a bullish vertical, by the way, over, say, a straight long call, is that I don't need as much distance in order to be profitable. So if I'm expecting this really, really big up move, then I might want to be in, or I'd probably prefer to be in a long call like we did on the last subjective per level winning trade. But if I'm not expecting that big of a move, I might want to go with a vertical, because it gives me profits with less movement, but it's at the expense of capping off your profits. I kind of did halfway here. So one of the ways that I can play both sides of the fence, so to speak, is I can do these really wide verticals where, rather than doing 10 points like I might in a Super Bowl, which really caps off my gains if it goes, I can widen this out and experience some pretty good gains compared to my risk, but it does still cap it off. So to the extent I want to allow to cap it off is where I'm going to put my strikes. So anyway, this is what Wednesday looks like. Right, this is Thursday. We're kind of getting a stall here around 5,400, 5,430. This is kind of expected. I'm going to see if it breaks up or breaks down. And this would be fine, right? This trade outcome, I'm up $1,100, almost 100% of my capital level. That would be pretty good, right? Let me move forward here. And boom, the asset decides it's going to make the run for my 5,500 price pattern target, right? So now my asset price is up at 5,490. At this point here, I might get a reversal off of this. We kind of talked about that. Now, it's almost, if I'm in an area, like, we're not trying to call an exact number of 5,500. I know somewhere around 5,500, I'm probably fairly likely that I might see a reversal in the index, but I might not. But if I look at my position here, I don't have very much to gain, and I have a lot to lose. So I don't like that, especially when the probabilities are kind of favoring kind of like potentially a reversal. So what I do here is I'm going to sell this call, and I'm going to move it up into here. So now I'm in what's called a super bear. And if I get this reversal down, I might make another 45 to 53. I might make another $800. If I'm wrong and the market goes up, then I'm out at about 4,300. So yes, I could exit the trade here, but I see another opportunity that, hey, maybe this thing might pull off this level during the next trading day. So I decide to make this move, and you can decide whether you think that's a good move or not. Maybe it would be good if I gave myself a little bit more time in the move, but regardless, this is what we did. And the next day, what happens is the market just stays high or continues to go maybe up a little bit, and we end up losing a little bit of our profits here, but we gave ourselves a chance to potentially make considerably more money. I ended up closing this maybe a little bit earlier in the day at a profit of $4,309 after commissions. But I'm certainly not upset about it, because that gives us a profit of a whopping $4,301 in only 13 days, with a risk of just over $2,000, for a total return of approximately 206% in only 13 days. And that is why I love our Pro membership and our Trade to Win program. It gives us the opportunity to make very high probability, very large returns on very small amounts of risk. Again, it's just a fantastic way to trade, and I hope you enjoyed this episode's Winning Trade. If you enjoyed today's presentation, I invite you to come on over to lockeinyoursuccess.com. That's LOCKE inyoursuccess.com, and discover how you can drastically increase your profits and consistency as a trader with our Pro membership and our advanced trading programs. Also, while you're there, check out thewinningtrade.com. That's thewinningtrade.com. You can explore past winning trades, you can learn about upcoming winning trades, and you can receive access to free bonus material. Also, while you're there, check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see in the next winning trade, please feel free to comment on this video, and I'll make sure I answer all comments for you personally. Thank you for joining me, and I look forward to seeing you on the next winning trade.